If you've ever handed your tax return to a loan officer and watched the smile slide right off their face, this one is for you. The bank looked at your net income, not your gross income, and then told you exactly what you were afraid to hear. You don't make enough. I'm Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. And today I want to talk about what I call the 1099 approval path. Here's the problem. If you're a realtor, an Uber driver, a DoorDash driver, a hairstylist, renting a chair, a cabinet installer, a wedding photographer, personal trainer, or anyone who gets paid on a 1099 instead of a W-2, you have a tax return that looks way one way on paper and a life that looks another way in real life. On paper, you write off your mileage, you wrote off your phone, you wrote off your home office, your equipment, your marketing, your software, every legal deduction your CPA could find. That is smart. That is what your CPA is paid to do. The problem is this: when you walk into a bank and apply for a mortgage, the bank does not look at the money you actually earn. The bank looks at what is left after all those write-offs. And that's the number they use to qualify you. So let me ask you a question. If you earned $200,000 last year on 1099s and your CPA brought your taxable income down to $65,000, which number do you actually live on? You live on the 200, but the bank is trying to qualify you on 65. That's why so many self-employed folks get told they cannot afford the home they are clearly already affording every single month. Here's the fix. It's called the 1099 approval path. Instead of looking at your tax return, we look at your 1099s. We add them up, all of them. If you drive for Uber and Lyft and DoorDash, we add all three. If you're a contractor with 3 general contractors sending you 1099s, we add all three. Whatever shows up on those forms, that is our starting number. Then instead of cutting your income in half like a bank statement loan does, we only take off 10% for expenses. 90 cents on every dollar counts toward qualifying you. Let me give you a real example. Say you had $200,000 come in on your 1099s last year. We take 90% of that, which is $180,000, divide by 12. That gives us $15,000 a month of qualifying income. Tap it into your phone or calculator. It's that simple. And here's the other piece. A bank statement loan asks for 12 months of bank statements, maybe 24. This program asks for 4 months, just 4. We use those 4 months to confirm the money is actually landing in your account, and then we are done. For example, we have an installer of countertops who works for 3 general contractors. Shows up in the morning, the materials are already there. He does the install and goes home. Each of those contractors sends him a 1099 at the end of the year because they don't want to pay employer taxes on him. A traditional bank looked at his tax return and told him no. We added up the 3 1099s, took 10% off the top, divided by 12, and he bought his home. Same guy, same income, different answer. Realtors, I want you to lean in on this for next part. You have up months and you have down months. That's the nature of the business. If you had a great November and a quiet February, we can use written verifications of employment and commission ledgers to smooth out the seasonal dips. We're not going to penalize you for a slow month when you had a record quarter. So what does this mean for you? It means if you have been sitting on the sidelines because a traditional lender told you the math does not work, the math probably works just fine. You just need a different set of eyes on your file and a program that was built for how self-employed people actually earn money. A few quick guardrails. You need a credit score of at least 620 to qualify. A 720 score opens up 90% financing. Loan amounts go up to $3.5 million. You need 12 months of self-employment history. And this works whether you are buying your dream home, buying your first home, buying your dream home, or buying a rental home. Remember, at Ron Siegel Radio, strategy beats rate always. The rate on the 1099 approval path is not going to be the rock bottom rate you see on a billboard, but the rock bottom rate on a billboard doesn't matter if you can't qualify for it. A loan you actually get is worth infinitely more than a rate you never see. If you are self-employed and someone has already told you no, or if you have been quietly afraid to even ask because you think you already know the answer, I want you to do one thing. Go to rsrlinks.com/second look. That's rsrlinks.com/2 look. We will take a second look at your file, your 1099s and your real income, and we'll give you an honest answer. No pressure, no pitch, just the math done correctly by a certified liability advisor who actually understands how self-employed income works. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to Mortgage 101, brought to you by rsrlinks.com/keysteps. That's rsrlinks.com/keysteps.